Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Knightscope and about the detailed numbers, financials that we just recently got about CASE emergency systems. We only had sort of bits and pieces of knowing about the company's financials before the acquisition, and I think it was about a week ago they finally filed their amendment to the 8K. So now we have the detailed financials. I'm going to walk through that today, sort of look at what my estimates of what the current combined company of Knightscope and now the acquisition of CASE Systems, what the company's financials look like. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Knightscope. So this video should be for your entertainment purposes only. Because I could be wrong about everything I say in this video, you need to do your own research before making any investment decisions. So a couple takeaways before I go into all of the details here. So CASE was actually GAAP profitable from reading through this, and you can, in the first 6 months of 2022, that is, you can see here they reported their, just real quick, trying to find it here, they had actual positive net income for the first 6 months of 2022, $200,000-ish. And their revenues were growing fairly quickly, about 84% year over year, roughly. That's just if I combine, take the first 6 months of 2022, multiply by 2 to annualize that, and then compare that to 2021. It was growing pretty quickly, and their margins, their gross margins, seemed fairly stable. Even their net income went up, went from, I think, negative to positive, and so that's good to see. Now, CASE did owe about $4 million in debt. They had some loans, and I think this all get paid off with the convertible notes that when Knightscope did the acquisition, just FYI. And a couple other takeaways real quick before I go into the details. As a combined entity, as of right now, I think they're at about 0% gross margins and about $15 million forward revenue. That doesn't really include any growth. And, if you sort of do the math on that, that would put the current price to sales of Knightscope at somewhere between 6 and 8, with sort of a revenue growth rate that, in the past year has been somewhere in the 60, 70% range. So I think that's pretty interesting. All right, so let's go through some of the details here. What I did was I pulled out the numbers. Hopefully I copied everything out correctly. I pulled out the numbers from the filing so that we could, quickly look over what do they look like in 2021 and then halfway through 2022. That those are the only numbers we have. They didn't actually do a Q3 filing, or they don't have audit accounting numbers from there. They only have these numbers for the end of June. And oh, hi Jay. Jay says, thanks Dustin, long time no see. Yep, thanks for hopping back on. I'm happy to see us still around. Yeah, I got a couple comments from a couple of my videos. December was busy. That's basically what it is, and I didn't have time to spend any time on the channel, which I'm sad about. But hopefully I'll be back now. So it's great to see you. Thanks for hopping on. So anyways, I have the numbers here for Knightscope, sorry, this is for CASE Emergency Systems, and I pulled the numbers for both the balance sheet, the statement of income, and then I sort of did a combined thing on some of the other tabs here, which I will go through. But this, what we're looking at right here, is just for CASE Emergency Systems, and this is the balance sheet. If you want to pause it or whatever and take a look here over there, or where they were at the end of 2021, you can see here. But mostly I'm going to be looking at end of 2022, just to take a quick skim over the balance sheet here. And they had, $750,000 in cash, and they had, they consistently had, 2 point something million in inventory. They had $1.3 million in receivables, so that was interesting to see the receivables go up a lot from in those 6 months. Although that's not necessarily good or bad, right? You sort of have to see that more over time and see if they're having issues there. But if I compare that then against their, what I was getting at here is their liabilities, where they, the payables aren't really anything to write home about. It's more than offset by the receivables. But if you look at their debt, right, that's really the big item here, where they had $4 million of debt. of actual loans, right? Of course, they have some leases on the properties. That is what it is. But they had $4 million, $4.1 million of debt, and sort of as I mentioned in the intro or in my initial takeaways, that debt was paid off by Knightscope in the course of doing this acquisition. And I kind of speculate here because I looked at the loans that they had. The loans were super low interest rate. They were like, I think they were like 30 years at 3.75% interest. If you look in the filing here, 3.75% interest, matures in March of 2041. So I guess they're 20-year loans at this point. And this one, yeah, matures in 2051. Interest rate of 3.75%. I sort of speculate I don't think they disclosed it in the filing, but I would guess that these had to be paid off if Case got acquired or had a transfer of ownership, and I'd imagine that's why Knightscope did this, because I can imagine they'd be happy to keep a 3.75% interest rate loan around for quite a while, and just pay the interest as it goes. But anyways, so that's kind of the balance sheet here, and one of the big things really to keep in mind if you are wrapping your head around this acquisition, that Knightscope raised all this money with the convertible notes, but really most of that went to paying off this debt, right? So even though they raised the purchase price, I think was $5 or $6 million, and sorry, I don't have it off the top of my head anymore. I've been reading through the details here, and just it slipped my mind, but it was somewhere in that vicinity, and a lot of that money didn't actually go to pay off the owner there, to actually, or the owners, the shareholders of the company. I believe a lot of that here went to pay off Case's debt, and you can see that if you look in the filing here. But so let's jump over to their actual income statement here, and you can see in 2021 they made $5.4 million, cost of sales $3.1 million, and they got $2.3 million or so in gross profit. Just in the first 6 months of 2022, they had $5 million in sales. So you can see that that's a huge increase, right? They sold in the first 6 months of 2022 almost what they did in all of 2021. And so that's what I said in my initial takeaways, that they were growing at, roughly, if you double this number and compare it, that's like an 84% growth rate. So that's huge. You can see their cost of sales was up on a percentage basis here. So their margins went down a bit, in terms of gross profit, but I think that's still in the ballpark. That's still very, quite profitable here. It would be interesting to know why that is. One thing that I don't like that they did not disclose here, and hopefully we'll see this in sort of future reporting from Knightscope, is how much of the Case Emergency Systems revenue, and for that matter, how much of their cost of sales came from just outright sales of the telephones, of the units, and how much was from sort of maintenance or service contracts, because it seems like that's how they structured things, and those really weren't split out in the filing here. So I'm looking forward and hoping that in the future disclosures that Knightscope will actually break those apart, so we'll be able to get a little more detail and color on how they are, how their revenue and how their costs are structured here. Now, their total expenses, what's also interesting here is that their expenses really did not increase that much. The other than the cost of sales, right? Their expenses, if you annualize this, 1.6 million here, you're at 3.2, and that's what do you call it? Maybe a 10% increase over the prior year on an annualized basis, and 10% increase in their operating expenses when their actual revenue went up 84% is pretty impressive. So I was pleased to see that, and that sort of says to me that there's nothing hidden in these expenses here that really should be kind of counted as cost of sales, and also that they don't actually need that much R&D, to continue operating, or for that matter, they didn't double their sales force in order to double their sales. Although maybe we would have seen this if we looked in years past. We really don't have that all that data here. All right, and so that's most of my takeaways from here. Now what I did was then I took those numbers from Case and combined it with, I looked at both the numbers from Case and also the pro forma numbers that Knightscope prepared. And this is, if I understand correctly, you can look through the file. I'm trying to find it. They gave these numbers of here's what we think the combined entity looked like as of June 30th, Knightscope and Case combined. And they had a bunch of adjustments here for things that happened during the acquisition, right? For example, you see here that, oh yeah, they got um they they raised the convertible notes, right? And they paid off the debt, right? You can see that right here. This is the adjustment where the debt obligations, the case originally had $4.08 million there, or about $4 million. And then now this is, in the combined entity, which is this last column here, it's zero because in this transaction, they actually paid it off. But then you see they add on also the convertible notes, right? Now they have this liability, which is the convertible notes and the warrants that were issued along with it. That's how they account for it. So if you take a look at all of this, what I did was I took these numbers here, the pro forma combined numbers, and then I looked at the changes in all this stuff on their balance sheet from Knightscope's Q2 to Q3 to give us an estimated balance sheet, an estimated view of the balance sheet as what it would have looked like right at the end of Q3. So real quick walking through here, they had about $10.5 million of cash, and they receivables are about $900,000. Prepaid expenses, right? All this stuff is nice. Inventory. Knightscope does not really account for this in the same way, so I didn't really have a great. This is maybe not a great way to do things. I think I probably could have done better, but I think they account for that somewhere down here in the autonomous security robots, if I recall, where they actually have the they just count it as in progress. Or raw materials. So that's really maybe a funny way to account for things, and I could probably do a better job reconciling it, but it's not really that big a deal to me. It's not something I'm super worried about. But if you look through here, you can see, mostly I took out, sorry, and these should be stricken through because I am not including in the formula. One of the assets that you'll see that got added on here, if you're unfamiliar with this, is the added on intangible assets and goodwill. And in particular, the goodwill is, this is just basically an accounting thing to make all the numbers add up so that their assets and liabilities make sense when they do an acquisition. But it really means nothing. It's not worth anything. So, and also intangible assets in general, I sort of ignore those because the value should show up somewhere else, is sort of my opinion. So my total assets excludes those two and really comes out to about $22.7 million in assets. If you look at their liabilities, these almost exclusively, is when a lot of these, they went up, right? Largely because of these convertible notes, and the warrant liabilities. And so really the punchline here is, if you were looking at, well, let me take all the assets and subtract off the liabilities, they were initially, a little bit off by about $750,000, meaning they had more liabilities than assets. And now they are much more in the hole, just on a sort of book value basis, if you're going to compare those two numbers there, which I know is, it gives you one data point. This isn't necessarily horrible, but it's it's not great to see, because they, especially with that cash position going down, as they do have this increasing liabilities. That's not really a great trend. I'm not super concerned at the moment, because of the massive growth that the company does seem to be going through, but I think it's something that we should keep an eye on. All right. And this was the statement of income. I combined these as well and tried to annualize it. So what I did for this was I looked at the CASE emergency systems. They reported the 6-month numbers ended of June 2022. And I just took half of those numbers, right, to sort of simulate what does 1 quarter's worth of their operations look like. And then I took the Knightscope's Q3 numbers and just put those in here, and then I added those up. And so this right here is my combined, this would be my Q3 estimate, assuming that, CASE's Q3 was similar to, the average of their first 2 quarters, which is possibly correct, possibly false, right? They were growing. So hopefully their Q3 was actually better. So this might be a bit conservative in that respect. But if I look at this, this is what I said before, you combine the two entities where Knightscope, as we know, is not gross profitable. case systems was, and you add them up, and they almost cancel each other out to the point where there is effectively they're neutral in gross profit terms, right? They had almost no. Technically, they if I look here, they're still not gross profitable, but it's a minuscule amount, $14,000. And as we go down here and look at the expenses are obviously still drastically higher than their gross profit, given the gross profit is near zero. And total expenses here for the combined entity is about $7.6 million. And again, this is on a per quarter basis. So that hurts, right? That's a lot of expense here. If you look at that, especially when you looked at their cash position of being about, $10 million. Now, I'm not sure that all of this are actually cash expenses. I think some of this gets paid for through stock. But regardless, it's a big spend at this point for these combined entities. And you look down here, there's not a whole lot of other stuff. And so really the punchline here is they're probably losing about $7.5 million per quarter. So very quickly, they're going to need some more money. If you're just kind of going off of this. Again, I think some of these costs are actually not paid in cash. So it's not all burn on cash. Some of it is actually just dilution. But we should expect that they're probably raising money through, using the equity line that they have, to sort of sell with B. Riley, I think it was. And then this is me transitioning, where they had this filing just today talking about changing some of the actual restrictions on these convertible notes so that they can go out and raise more money. And let me find that real quick. That would be, oh yeah, this is today's filing. So this is a bit of transition out from the actual numbers here, but and this was just filed today. They talked to the holder of the convertible notes, which, fun fact, you can see who holds this if you go look you look at who signed the agreement and waiver, this agreement here. This is somebody from the Alto Opportunity Master Fund. So I thought that was interesting. I looked up just a little bit. It looks like a small hedge fund. But anyways, if you look at this agreement here, the summary here is good enough. And it basically, they talked to those folks and said, hey, in the original convertible notes agreement, we had this condition where we have to have at least $3 million in the bank at all times. And they said, well, what if we lower that to $1.5 million? And then they also talked about going out and trying to raise more money in the form of unsecured notes. And there's a bit more details if you look in the details of filing here, and the I'm blanking, the exhibit here, the attachment, and it says they're going out to raise, I think, up to $20 million of unsecured convertible notes. And they say the maturity has to be no earlier than 6 months after the maturity date of the original notes, and with a fixed conversion price of $10, which I thought was interesting, since that's more than a 5x from the current stock price. And so that is seems pretty lofty to know that, to think that they'll be able to raise those, but we'll see. It'll be interesting if we see a filing somewhere between here and February 14th, as that seems to be a target date that they have here, for actually having this waiver stick, this waiver in terms of how much cash they have to have on hand. That if by February 14th they get somebody to agree to give them convertible notes that convert at $10 per share. Just thought that was interesting. So that's kind of where they're at. A couple other takeaways that I had here. I think I mentioned up front that their annual revenue run rate based off of their Q3 is about $15 million. And so, their current price of sales is about somewhere between 6 to 8, with the current market cap of somewhere around $100 to $120 million, depending on exactly, how you want to compute the number of shares and how you want to account for the options that are outstanding. So I think that is most of what I want to go through today. I don't know, Jay, if you're still on. I know, sorry, that was a longer stream than I expected. I don't know if you had any questions or comments, or if anybody else is on. I still can't actually see who's on these streams. The app just doesn't show me. But I think that was all I wanted to cover today. I do intend to, for anybody who is still watching and who noticed I took a bit of a break. Like I said, I was just busy in December. I do intend to do more videos going forward, but sometimes life gets in the way. But yeah, that was I was really interested to finally see all these numbers from Knightscope about case and to get some of these details here. Hopefully, let me know if any of y'all had questions or comments or thoughts on this topic as well. So, all right, I will hop off then. Thank you.